US stocks edge down with all eyes on Nvidia results due today. Treasury yields rise as traders eye more bond supply. The Reserve Bank of New Zealand cuts, as expected, and lowers its rate track, although one dissenter wanted a hold. And disinflation progress has stalled in Australia. That's coming up in our 5 Things in 5 Minutes on Thursday, May the 29th. And then in our deep dive interview, ANZ New Zealand Chief Economist Sharon Zollner says the Reserve Bank of New Zealand's 5-1 vote yesterday indicates New Zealand's rate-setting committee may be nearing a turning point.
The committee has had to go to a vote before, and the acting governor, Christian Hawkesby, pointed out that makes sense, that it would be sort of at this point of the cycle when you might be sort of nearing a turning point, when things are particularly uncertain. I would say that this global shock falls into that category.
But first, in 5 and 5 with ANZ, US stocks fell slightly overnight as investors waited on results from Nvidia. Meanwhile, the yields on US treasuries rose through the session as traders eyed new bond supply, with the 10-year yield up 5.4 basis points at 4.488% at 4 a.m. Sydney Melbourne time. Yields had been higher until a solid sale. In the US economy, the Richmond Fed's manufacturing index showed activity continued to contract in May. ANZ economist in London, Bansi Madhavani, says the contraction was at a slower pace than in April.
April's weakness was more acute because of tariff announcements and uncertainty that weighed heavily on activity. Some of those uncertainties seem to have receded in the May data. However, it's important to note that the economy is still not out of the woods. Regional Fed activity indicators so far are suggesting downbeat economic momentum in May. That's consistent with our view that tariffs and related uncertainty will weigh on broader growth outlook.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was down 0.2%, the Nasdaq down 0.1%, the US dollar index up 0.3% at 99.87, the gold price down 0.1% at $3,323 an ounce, while West Texas oil futures were up 1.74% at $61.94 US a barrel. The strength in the US dollar saw the Aussie trading down 0.3% at 64.28 US cents. The Kiwi, however, was trading up 0.2% at 59.62 US cents after yesterday's Reserve Bank of New Zealand rate decision. Number 2, the Reserve Bank of New Zealand cut its official cash rate 25 basis points to 3.25% yesterday, while also reducing its forward guidance track, indicating the official cash rate may fall below 3% later in the year. However, ANZ Chief Economist Sharon Zollner says there was something for everyone in the decision, with one of the rate-setting committee's 6 members voting to keep the OCR on hold.
Dovish people, those who are expecting rates to go lower, could point out that indeed the Reserve Bank did lower their forecast for where the official cash rate is going to end up. So they cut from 3.5 to 3.25, but their forward track actually dips all the way down to 2.85%, suggesting more cuts to come, though it was gradual. Initially, actually, we saw the 1-year swap rate jump, perhaps in response to the fact that that forward track was quite gradual falls, implying at face value the risk of a pause at one of the upcoming meetings. There was also a very interesting factoid. One of the committee members dissented, so they couldn't reach a consensus decision, so they actually had to take a vote, and one person out of 6 voted to actually hold the OCR.
Number 3, meeting minutes indicated the person who voted for a hold in the OCR was concerned about a recent lift in short-term inflation expectations. Sharon says that may be temporary and linked to headlines about the impacts of tariffs on global prices. ANZ Research continues to expect the OCR to go to 2.5% in this rate-cutting cycle.
For our part, we do see that the New Zealand economy is in quite a disinflationary state. The recovery has been a little bit stop-start. The household sector is still being very cautious with its spending. And so our baseline is that those concerns will dissipate.
Number 4, Australia's monthly CPI inflation rate remained at 2.4% in April, compared to market expectations for a fall to 2.2%. ANZ senior economist Adelaide Timbrell, who was forecasting 2.5%, says in a note that disinflation progress in Australia appears to have stalled in recent months, with the core measure rising from 2.7% to 2.8% in April. Number 5. Back to the United States, where US policymakers continue to be concerned about inflation pressures off the back of the administration's tariff plans. New York Fed President Williams said in comments over the night that he was worried about the risk of inflation expectations becoming unanchored. Here's Bansi again.
He made a point that policymakers should aim to anchor not only the longer-run estimates of inflation, but the whole curve. Now, it is important because the short-term inflation expectations have surged recently on the back of tariff tensions, with University of Michigan's preliminary survey showing one-year inflation expectations up at 7.3%. So his comments broadly affirm the FOMC's wait-and-see approach, and we think the FOMC is unlikely to cut the policy rate in a rush.
Bansi Madhavani there. Now, in our deep dive interview, ANZ New Zealand Chief Economist Sharon Zollner dissects the Reserve Bank of New Zealand's rate-setting committee's 5-1 decision to cut the OCR yesterday and what that could signal for interest rates from here. She was speaking to my colleague Alex Tarrant.
So in the discussion about the summary of the meeting, it was pointed out that some committee members were concerned that the recent rise in some surveyed measures of inflation expectations could reflect a more generalised lift in potential inflation pressures. So presumably it seems likely that was the same person. Perhaps there's just been a little bit of flow from all the noise around global tariffs and how inflationary they could be. Perhaps that has sort of sneaked into New Zealand inflation expectations, even though the general expectation here is that those tariffs will be disinflationary here, if anything. But the Reserve Bank did choose to outline a couple of scenarios around how that global tariff noise could affect New Zealand, because there's obviously a huge amount of uncertainty. So in one scenario, it is a downside risk for the economy. Global demand is weaker, so we have lower commodity prices, and they end up cutting the official cash rate by more, indeed down to about 2.5%, similar to our own forecast. And then in the other scenario, there's a global supply shock. Global supply chains get a little bit tied up in knots, and that actually causes global inflation to be higher even for our import prices, even though we're not putting on tariffs here. In that scenario, potentially the OCR would need to be a little bit higher than otherwise. So it was quite useful for the market if the data does start to tilt in one direction or the other, then the market has some kind of guide rails to assess what the likely Reserve Bank response would be. But the RBNZ was certainly at pains to point out that whatever happens, they're in a really good position to respond because essentially inflation is beaten. They're keeping a watchful eye on those inflation expectations, and some committee members are pretty relaxed about that and others less so, clearly. But if we did get hit with a negative shock, they are in a good position to respond quickly if needed.
I am interested in the dissenter. Has this happened before?
The committee has had to go to a vote before, and the acting governor, Christian Hawkesby, pointed out that makes sense, that it would be sort of at this point of the cycle when you might be sort of nearing a turning point, when things are particularly uncertain. I would say that this global shock falls into that category. So when you're just chugging along on a path that's not preordained, but is certainly well signalled, then consensus is relatively easy to reach. But when you've got things pointing in different directions, he described it as quite a healthy dynamic, that they are required to try to seek consensus, but it's not seen as a failure if they can't get it. Indeed, he pointed out that the committee structure is quite strong and it's working well. And the fact that there was so little market reaction to the unexpected abrupt departure of the previous governor showed that the committee structure is working well. And if one person departs, then the committee carries on.
Was there anything in the Reserve Bank's wider forecasts that was of note? Any indications of their views around how the government's budget will affect aggregate demand?
They commented in the press statement that it was very nice that the budget was before the monetary policy statement so that they could incorporate it. No bold statements in there about the impact of it on their forecast. I think the overall impression was that they didn't view it as a game changer for the near-term monetary policy outlook, at least.
Sharon Zollner there talking to Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, May the 29th. I'm heading off on holiday from tomorrow through June with my colleague Alex Tarrant stepping in for the next month. You can catch Alex tomorrow with analysis of a rates decision in Korea and the latest ANZ New Zealand Business Outlook survey. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.